African banks to fund construction of world's biggest marine diamond mining vessel. Namibia targets $1 billion worth of investments in 2 years. Plus, power cuts hit homes and industries in Ethiopia as dam levels drop. Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimezi Obi. First, the markets and the Nigerian stock market appears to be snapping back from a string of losses at intraday, worth a 0.41% uptick in the all-share index. The South African index was also up 0.75% at intraday. It's the opposite in Egypt, where the index was 0.67% lower, while Kenya closed 0.65% in the red on Wednesday. In the Middle East, Saudi Arabia's stock market fell at intraday amid escalating tensions after a U.S. drone was shot down by Iranian missile, while Dubai rose on back of its real estate shares. The Saudi index, which fell the day before, lost close to 1%, with most of its banking shares sliding. The Abu Dhabi index was up 1.4%. In Dubai, the index was up 0.74% thanks to its real estate shares. Emma Properties, the Emirates' largest listed developer, gained 1.6%, and its unit Emma Malls rose 3%. Qatar's index rose 1.73%, with the Bank Masharaf Al Rayyan gaining 0.8%. And in Europe, stocks traded sharply higher in the morning as investors await an interest rate decision from the Bank of England. Meanwhile, the New York Times reported on Wednesday that the Deutsche Bank faces another anti-money laundering investigation. Well, Daniel Cook, my colleague there in Frankfurt, will tell us more. Hello, Daniel. Good afternoon. It's a rainy day here in Lagos.
A rainy day in Lagos? Well, a very sunny day here in Frankfurt, in fact, with temperatures close to 30 degrees. So, yeah, we are sweating, but at least the Frankfurt Stock Exchange offers some air conditions, so it's not that bad.
Well, I guess you're enjoying that weather anyway. Okay, trouble once again for Deutsche Bank, Germany's biggest lender. According to media reports, authorities in the U.S. are investigating Deutsche Bank for alleged violations of anti-money laundering regulations, possibly involving the U.S. president. What do you know more?
Well, first, you're right. I mean, whenever we talk about Deutsche Bank lately, usually I'm reporting you not very positive headlines at all. And this is something that's really getting also on the nerves of investors. And this headline could be even be a little bit more unpleasant for Deutsche Bank. We are talking about something what happened in 2016, according to media reports. A former employee informed the top management of Deutsche Bank about transactions and payments apparently of the son of Mr. Law, no, let's say that again, of the son-in-law of U.S. President Donald Trump, Jared Kushner, to Russian individuals. And well, he was reporting that to the management, and it seems, that's what the media reports are saying, that nothing happened, that no antitrust organizations or authorities were informed. And if all of this turns out to be true, this could create a rather bad image for Germany's biggest lender. We tried to get in touch with Deutsche Bank today. To be fair enough, we have to say here in the state of Hessen, where we are, it's a bank holiday. Today, Deutsche Bank just located a few minutes basically away from where we are. The only comment that we got today is that they are monitoring the situation and that, of course, they are fully operating and talking with U.S. authorities. We don't really know how all of this is really going to unfold. What I can tell you, it certainly did not help the share price of Deutsche Bank once again. It has been dropping today more than 1%. And I mean, really somebody who is still trusting in Deutsche Bank, and of course some investors are, they have been going through some rough times. I was taking a closer look at the numbers. Just during the last 12 months, the share price of Deutsche dropped by more than 30%. So they really need to get some good headlines again for that share price to be finally back to the winning zone.
I guess it's a developing story, and I hope we'll just keep a tab on that and perhaps talk more about it maybe tomorrow. Anyway, how are investors reacting to the latest decisions by the Bank of England? That was today, and of course, the Fed had its decisions yesterday.
Well, let's talk about the Fed first. I guess you can see it in the background, and that's also why it's rather sad that Deutsche Bank is performing not very strong today, because in general the market environment today is doing pretty good. We are here in the green zone at the moment with more than 90 points in the winning zone at the moment. It was kind of expected what we heard yesterday from Jerome Powell, the chairman of the Federal Reserve there in the United States, as for the moment he would leave interest rates and the monetary policy unchanged, but promised two possible rate hikes for the rest of the year. Very interesting, though, even though the Fed is officially an independent organization or institution in the United States, we have to remember that Donald Trump is not at all in favor of higher interest rates. So he has been spreading the rumor that maybe he would even replace Jerome Powell if he is not heading in that direction as he wants him to head. When you talk about the Bank of England in the United Kingdom, also their interest rates for the moment unchanged. They remain at a level of 0.76%. Also, that was widely expected. We talked about yesterday about the inflation rate in the United Kingdom that has been dropping, also because of very good unemployment numbers, despite all the uncertainty we're still getting from the United Kingdom because of Brexit, because of who's going to be at the end, the successor of former Prime Minister Theresa May. So yeah, lots of uncertainty there, but the Bank of England still saying yes, we'll remain with our monetary policy, at least for the moment.
And to other news now, it could be a very difficult summer for travelers in Europe. The Flight Attendant Union, UFO, said today that possible strikes could happen at low-cost carrier, Eurowings, Germanwings, and possibly Lufthansa. Now, what are you hearing, and how is this affecting the share price of Lufthansa, who has been very much under pressure during the last days?
Yeah, exactly. It's been very much under pressure during the last days and even throughout the last months. I mean, just 2 years ago, Lufthansa was the strongest performer here at the blue chip index DAX. Their share price went up to a level of 26, 27 euros. Now it's down at a level of about only 15 euros. Just during the last year, it also lost more than 30%. And of course, also with this news about possible strikes now in July, which would be horrifying for travelers, because here in July, most of the schools are on vacation. Thousands of passengers will be wanting to travel somewhere, and possibly with Lufthansa, with Eurowings, or with Germanwings. So this would certainly create some chaos. Well, Lufthansa has been in this dispute with UFO, that's the flight attendant union, for quite some time. They even stopped talking, which is never a good idea to stop talking when you're still in this negotiation process. But yeah, so we had this press conference of the flight attendant union today. Of course, Lufthansa at the same time saying that they don't understand this, that they are still willing to negotiate. So yeah, let's see how all of this is going to unfold. It would be pretty much a disaster for travelers. We're talking here, I mean, we have to remember that a few years ago, pretty much all the Lufthansa hoping for a solution.
I hope that solution comes soonest. Thank you, Daniel. We'll just have one more day to say thank God it's Friday. Enjoy the rest of the day.
Yes.
Well, the week's focus on central banks continued today with the Bank of England announcing its June policy decision today. Let's bring in Simon Pusey, my colleague in London studios, to tell us more. Hello, Simon. Good afternoon. Well, the BOE announced its rate decisions about an hour and a half ago. What are the details?
Yeah, lots of details here to get through, Chimmy. The Bank of England, as you said, they've warned that economic growth in Britain could grind to a halt during the second quarter, mainly due to perceived risks to the economy from a no-deal Brexit. The Bank of England slashed its growth forecast for the 3 months to June to 0. That's from 0.2%, which they'd earlier predicted. And that's during the broader deterioration in the economy since Theresa May extended the Brexit deadline until the autumn. So as a result of this, the 9-member Monetary Policy Committee voted unanimously to leave interest rates on hold at 0.75%. The central bank said the lack of certainty was hampering growth across the UK. The Bank of England slashed its growth forecast for the 3 months to June to 0 from 0.2%. And that's the whole reason that we're really talking about, since Theresa May extended the Brexit deadline until the autumn, warning that the downside risks to growth had increased as the threat of crashing out without a deal has risen up the agenda. It said that companies expect uncertainty to persist, while there were no clear signs that firms would increase investments in Britain. The bank said the pound had dropped in value on the foreign exchanges given the perceived likelihood of a no-deal Brexit, while mounting tensions over international trade amid the US-China trade dispute had also slowed the economy. So we've got one part looking at Brexit, the other part looking around the UK and those trade fears between the US and China.
All right, so the decisions meet expectations. How are the markets reacting at the moment?
Well, this news wasn't entirely unexpected, and the markets have been steady, having heard the policy updates. The FTSE 100, whose exporters are buoyed by a weaker currency, was up across the board. This is not all to do with the bank's decision, but other factors involving the US and China in the background. The all-share is up by just over 4%. The FTSE 100 is also up by around the same amount, and the FTSE 250 is up by 0.8%. Sterling dipped from its earlier highs, and UK stocks and gilts rallied after the news from the Bank of England. The pound gave up some of its earlier gains against the US dollar, although it was still up 0.6% earlier. It was also up against the euro by 1.12 points and very slightly up on the yen.
And to other news there, hydrogen-powered trains are arguably the greenest trains. So tell me, are you aboard Britain's first hydrogen train?
Not yet, Chimmy, but it looks like they are coming to the UK. Mini power stations on wheels, that is how the University of Birmingham researcher describes them, as they give off zero emissions and their only byproduct is water. The UK's first hydrogen-powered train does look like it will be coming. It's going to be created by the Birmingham University and Porterbrook, which is one of the UK's 3 main private rail companies. 2 hydrogen trains are already in service in Germany, but the design is not compatible with the rail network we have here. Unlike diesel trains, hydrogen-powered trains do not emit harmful gases, instead using hydrogen and oxygen to produce electricity, water, and heat. It's thought hydrogen-powered trains could run on the railways here as early as 2022. In January, the French rail multinational Alstom and UK rolling stock operator company Evershot Rail Group unveiled the design for a new hydrogen fuel cell train for the UK market. It would bring zero-emission hydrogen tech to parts of the UK that still run on diesel. So to answer your question, Chimmy, I've not been on one yet, but maybe soon, sometime in the future, we'll be able to travel around the UK on these greener, more sustainable trains.
I'm sure you're looking forward to that. Anyway, thank you for this update, Simon. And stocks in Asia were higher today after the U.S. Federal Reserve left interest rates unchanged overnight, but opened the door to rate cuts on the horizon. Mainland Chinese shares surged on the day, with the Shanghai Composite adding 2.38% to about 2,987 points, while the Shenzhen Composite gained 1.95%. Hong Kong's Hang Seng Index rose 1.1%. The Nikkei 225 in Japan gained 0.6%. South Korea's Kospi closed 0.31% higher. And in the U.S., stock index futures were sharply higher in the morning after the Federal Reserve signaled possible interest rate cuts later this year. At around 4:50 a.m. Eastern Time, Dow futures rose 188 points, indicating a positive open of more than 203 points. Futures on the S&P and Nasdaq were both seen slightly higher. Our market focus is largely attuned to monetary policy settings after the Fed signaled interest rate cuts beginning as early as July. And 5 African commercial banks have partnered in a $375 million financing deal to build a new diamond mining vessel for a subsidiary of Anglo-American's diamond unit, De Beers. Nedbank Namibia, RMB Namibia, Standard Bank, Absa, and Bank Windhoek agreed to provide 80% of the funding for the ship, which will be the world's largest of its type. Deb Marine Namibia, a 50-50 joint venture company between De Beers and the government of Namibia, will provide the balance of $94 million. The ship, to be known as the AMV3, will be the seventh in the Deb Marine Namibia joint ventures fleet, which mines high-quality diamonds from the ocean floor using high-tech surveying equipment. When we come back after the break, of course, we'll look at the domestic commodities market as well as other stories. To stay with us.